All right, welcome back. Could the Fed actually cut rates by 0.5% at the meeting on the 18th of September? A lot of pundits have said that could send alarming signals. One of which is that the Fed might see something that the market really doesn't. Could scare everybody, right? But there are increasingly more voices saying that a 0.5% cut, or 50 basis points, might actually be more appropriate. Now, Michael Yoshikami, a CEO of Destination Wealth Management, said Monday that a deeper cut would demonstrate that the central bank is ready to act without signaling deeper concerns. He says that that would be considered, on one hand, a very positive sign the Fed is doing what is needed to support the jobs growth. And he said, I think that the Fed at this point is ready to get out ahead of this. Well, his comment followed similar remarks Friday from Nobel Prize winning economist Joseph Stiglitz, who said that the Fed should deliver a 0.5-point interest rate cut at its next meeting, contending that it went too far, too fast with its previous policy tightening. Those rate hikes came way too often. Now, my next guest, he's a markets guy. He wants to get a little bit of a take on the subject from him. Please welcome to the show the CEO and co-founder of Wealth Management Group in Chicago, Mr. Craig Bolanos. Craig, thanks for being on.
Scott, what do those Nobel laureates know anyway about the real world? I'm teasing. I'm still hoping we just get a quarter point cut. I don't want 50 yet, although I'm willing to take 50 in November after we get 2 more employment readings. I think that's going to be where the rubber hits the road.
Well, in case anybody doesn't know out there, they've really put themselves in a bind, right? They're trying to keep inflation down, but at the same time, they want to keep the jobs market going. And there's a lot of folks out there, I think about 80% of America believes that they're in a recession right now. I can bring up some research that would actually say that. But at the same time, you start cutting rates, Craig, do we have to worry about inflation rearing its ugly head again?
Well, we're going to find out on Wednesday and Thursday this week, because we got CPI on Wednesday, we got PPI on Thursday, right? And both of those numbers aren't the real leg in the room. I mean, what the Fed, of course, pays attention to is the PCE, which came out at 2.5% in July. So I don't know that I put a ton of stock into Wednesday and Thursday's readings, although I'd like to see all that headline inflation continue to trend lower. I think the bottom line is, at the end of the day, we are priced in for 100 basis points worth of cut between now and the end of the year. And I think that comes in the form of 25 in September, 50 in November, just 2 days, by the way, after the presidential election campaign, and then we'll get that final round of cuts in the month of December. That's how I'd like to see it played. I think that's how markets would like to see it played, but we won't know until the proof is actually in the pudding.
And if you go to the CME FedWatch tool, I haven't been there recently, but it still looks to me that most people still think it's going to be a quarter basis point cut or 25 basis points.
Well, 71% of those that have an eligible vote on the CME would tell you you're right. 71% chance of a quarter cut, 29% chance of a 50 basis point cut. And you know what, Scott? It's almost good that everyone's so focused on rate cuts and less people are focused on the soup du jour. But tonight is the first presidential debate. Obviously not Biden and Trump, but Trump versus Harris. Are we going to learn anything about policy during tonight? I don't know. Will tonight be enough to persuade or move the needle? Not sure. I'm just hoping that when this election gets squared away in November, we don't have any hanging chads. Shout out to that thing from 24 years ago. I don't think the country would survive at this go-around.
No, I think that there's probably every likelihood of something like that happening. But to your point, look, when we do start to cut rates, the market, generally speaking, history tells us that it doesn't like it because we're cutting rates because things aren't good, not because they're fantastic. What do you think?
Well, I think in the initial rate cuts, notice I said the initial rate cuts, you're still okay because everyone who's invested in capital markets is paying attention to the major influences. And again, those major influences right now being soft landing and hard landing, and soft landing is still in the dominant position. So I think people will stay long. But you're right, longer term, you get through the first 100 to 150 basis points of rate cuts, then you got to ask yourself, wait a second. If they're still cutting beyond that, that must mean there's some much stronger deterioration ahead, and that's when people get worried. So I don't think people need to go into the bunker in 2024, but I think people do need to make sure they're rebalancing portfolios and having good risk protocols for their investment capital.
And that's, excuse me if, I don't really think a quarter to a half makes that much of a difference. There's going to be a lot of people out there that think it does. But I still am suffering from PTSD from 1992 when George Soros broke the Bank of England, and I was trading short sterling, which is their interest rate product. And we came in on a Wednesday morning with interest rates at 10%. The Bank of England quickly raised them to 12%, so 200 basis points. Then after that, they raised them to 15%, so another 300 basis points. And by the time we went home after work, they cut them 500 basis points back down to 10%. So after that, all of this seems kind of minuscule to me, but I know the market's going to be looking at it and probably overreading it and overthinking it at first, but we'll have to see how that goes. And I don't think there's anything that's going to come out of this meeting. I know you kind of started to address that, but out of tonight's debate, I don't think there's really going to be anything there that would possibly move the markets. I think we pretty much know most of what she's proposed and what he's done, right?
I think we're not going to learn anything new, but you know what? I should never say that debates don't matter, because while debates typically don't move the needle, especially in a country that's as polarized as it is, the last debate did move the needle because it caused the presidential candidate to be displaced. So you can never discount what can happen in the forum of public TV broadcast around the globe.
Great stuff. Thank you very much for coming on. Craig Bolanos, co-founder and CEO of the Wealth Manager Group in Chicago.